Okay, welcome back everyone. We're going to get right into the stock market technical analysis, and I'm just going to jump right into it. I'm not feeling super great, so bear with me, but we're going to get into the analysis, looking for profitable trade ideas, looking for what the market is telling us using the charts. If you guys are finding value in the content, you've been with me for a while, drop me a thumbs up. I appreciate that. Subscribe, that's the bare minimum. And then again, if you're interested in learning this as a skill set, I have an educational course, 5 to 6, it's about 5 hours or so of multiple concepts broken out in individual courses, and then I put it all together with a final checklist at the end. Link in the description below on that. And I do have a private member group where I do additional market insights and additional market commentary throughout the day. Link in the description below on that. Both products are affordable, so check them out if interested. Triple Qs, guys. We saw obviously a rally today. So let me give you my thoughts on where we're at, and I'll just kind of back it up with the charts. If I look at the daily chart here on Triple Qs, I've got kind of two trend lines. One, they're both coming off of the, kind of the December 2021 timeframe. This is the entire bear market we've been in, for at least for the last year. And that's the downward trend line. It's a very obvious trend line at this point. So nobody, there's really nobody that thinks we're not in a bear market at this point. I mean, it's just obvious. So when something becomes obvious, usually maybe you get a little bit of a different reaction. That's something to take note of. Now on the daily chart, we've got, as we walk in, the double trend line that I have, I've kind of got one where I'm capturing this peak right here, and then I have another where I'm, I'm connecting this data point, this cluster, kind of bypassing this one, and then I've got this little reaction right here. Okay, and then in that situation, if I have that lower trend line, we're slightly above it with the close today. Okay, so that is one thing to note. Now the upper trend line right here, which is capturing really this data point and then just kind of that peak, we've got a little bit higher to go. That one falls right now at about 289, somewhere right in there. I apologize. 291.50, somewhere right in there. So maybe we're gonna, hit that and get a reaction. I think it's very likely we get a reaction. Today, obviously, you saw the sellers starting to step in as we approach that trend line. The sellers started to step in, but nothing impulsive quite yet. So we'll see how that plays out. You also have the 200-day simple moving average just overhead, which is, as of right now, sitting at about 293.65. And we have horizontal resistance right in here. So there's just a lot of overhead resistance just overhead. It's, we're not sitting on it perfectly, but it is just overhead a little bit. Really by, if I look at where we're at now, it's potential up to the 200, about 1.5%. So again, I don't know if we're going to get that, that move up there before we get a reaction, or if we just get it before. I don't exactly know. Now, I'm not shorting the triple Qs quite yet. I think there's a few things I want to kind of take notice of, because I could see us, breaking above some of this stuff and rallying a little bit more. One thing that I'm just really taking notice of right now is the fact that, this trend line, every single time we've had a reaction, it's been, months before we've revisited that trend line. Okay, there's the second reaction, months, we revisited it again, months, and then recently we hit it here, and it's a lot shorter of a time frame, and we're right back at it. Okay, so that's definitely something to take note of, that we are getting, the buyers are stepping in earlier. All right, so that's one thing to notice. We also did have, this bullish divergence on the daily chart. All right, we're coming off that divergent low. So that was the last divergent low right there. And that bullish divergence is setting this up for a larger, move up than just this leg right here. I think there is the potential to possibly move up a little bit higher. So yeah, that's where I'm sitting at right now. If I narrow it down to like the 5-minute chart, you'll see that basically, today on the 5-minute, we were just kind of walking up this trend line, and we hit this and just continued to creep up. So there's no breakdown or sell signal. Now, yeah, that might come in the form of a gap down tomorrow, but I don't know. As of right now, there's still some relative strength in tech. Okay, so I'm not interested. I'm not interested yet in shorting tech. The other thing is NVDA. I noticed this one was pretty strong today. If I look at the daily chart, you'll notice here, this is kind of your bear market, and I've got it marked in red right here, and we're above that now. So there is the potential. Now, I could probably redraw the trend line, and maybe we get a reaction at this third tag. If I kind of move this up about right there, then that would set NVIDIA up to go a little bit higher. But as of right now, I'm going to just leave it right there, and we'll see how this behaves. It's pretty bullish. We took out the former highs, breaking above this trend line pretty impulsively, up quite a bit. And in general, just looks bullish to me. So I need to see a little bit more before I'm interested in shorting the market. One could make a case to go long, but the one thing that I would take note of is this breakout that occurred here on this daily chart is a divergent high. So you'll see here on the daily, we still have negative divergence right here. So we're making a new higher high in price than the former high, but lower momentum. So I don't take breakouts that occur with negative divergence, and this one does have negative divergence. Not a reason to short, but not a breakout I want to take. If anything, I would maybe look for this to fail and come back into this trend line and signal a false breakout. But that might take a couple days, and nothing says this can't continue to rally higher. So that is all. And again, if it continues to rally much higher, you're going to burn through the divergence. And at that point, that would be pretty bullish. Okay, one final look at tech, and then we'll move into the S&P 500. So here's XLK. This is pretty much tech minus Amazon. And you have this bear market that started basically back in December of 21. Resistance, resistance, and there we are. As I zoom in on the daily chart, you can see we're just underneath. Now we're above the 200-day moving average. We have not hit this trend line. We're just underneath. Okay. No reason to not. I mean, it's relatively objective to short here because you're at major resistance. And that hasn't been taken out, but I'm seeing a few things in the markets that maybe are telling me to hold off on that, at least for the short term. So that's all I have on XOK. It's still at resistance. Nothing's technically changed. If I look at the hourly, relatively strong price action. I don't know. We're here. We might grind around here and build some divergence, then get a pullback. Maybe not. So it's objective to short, but there's just a little bit more information that I would need. I just don't feel 100% confident shorting here on triple Qs and stuff, even though, we're at resistance, just slightly below. All right, so that is XLK. Let's look at SPY. Oh, and actually, one more thing about XLK. One of the reasons why I don't have the most amount of confidence is, we did have just bullish divergence starting to show up right there on the daily. Okay, so you had bullish momentum. This was a divergent low here when it opened up down there. So that signals a rally. Now, I think this has probably justified this rally because off that divergent low, it's rallied 20%. So I think that's validated it. But the other thing is when I have such a clean downtrend line, I would expect they're going to have to, it's just too obvious to have such a clean downtrend line. I would think they're probably going to try to break out, trade up here for a little while, get everyone foaming at the mouth bullish, thinking that the bear market is over, and then roll over. So something we'll look for. Okay, S&P 500, same kind of look. We're basically right there at trendline resistance. There's your downtrend line on the S&P 500. Multiple reactions to validate it. There's another one. There's another one. So there's just so many reactions to validate it that at this point it just seems too easy that, okay, we're at resistance and we get rejected. Again, I don't see divergence on the daily. We had a slight divergence today. If I go down to the hourly, I assume it's there. Negative divergence on the hourly. So you'll see we're making kind of a higher high in price over those former highs, which took place right in here, make a new higher high. It is a divergent high as of right now on the hourly chart. So could be good for a pullback. And that's it. It's at resistance. It does have negative divergence at the hourly, so it is objective to short on the SPY. I'd be more open to shorting the SPY at this point than tech. It seems like there's some rotation going on into tech and out of some of these other sectors, such as XLV. You can see that one was up today, but just barely. It's kind of just treading water. I'm not interested in shorting this one, but it definitely just is showing me that there are, there's some sellers stepping in. While this has been moving down, tech has been moving up. Okay, nothing's really changed with gold as of right now, so we'll continue to, monitor that. One thing is the dollar, though. You still have bullish divergence on the daily chart. See it right there? We're building bullish divergence on the dollar. While the dollar it's really not drifting lower. It's just kind of drifting sideways right now at support while building bullish divergence. This is weekly support. If I get down to the weekly chart, you can see coming off of 2011, you've got all these reactions of support, and we're right there building support, holding support on the longer time frame while building bullish divergence on smaller time frames like the daily and hourly. So that looks like a bullish setup to me. There's no buy signal per se. And for the buy signal, I'd probably want to narrow it down to some sort of a trend line, look for some sort of a breakout and a buy signal. I don't have that quite yet. But if the dollar's going to hold and rally from here, that should be bearish for gold and silver. So just keep that in mind. All right, so let's get down and look at some individual trade ideas that I like in terms of just the patterns and what the charts look like. JP Morgan, all right, this is a nice setup. Nothing says it's going to work. We can't there's no guarantees. But on the daily chart, negative divergence, all right? That's very clean and easy to spot. We have a trend line marching up. I can move the trend line around, but even if I move it around, we've still broken it, okay? And I think the sell signal came right here. So you had a sell signal followed by more selling the next day, getting a little counter trend rally. But in general, I think this has started a downtrend. So, I think we're working our way lower. Support on this one, you got some support right down here at 128.40, and then you've got the 200-day, and I know 25 or there's lots of support levels down below. I mean, we'll look, but for now, let's just target this one at 128.30 and the 200-day. So that's a 6-7% drop, and then down there probably another 10% or so. About 10.5%. So we'll watch those. I like that as a short setup still. Still looks good. DHI. This one, a little tricky because it did have a sell signal, but no real follow through. So definitely something to take note of. Earnings also tomorrow. And so that always leaves kind of things in question. The one thing is we saw a breakdown just a couple days before earnings. I'm not in love with that. I don't like to see moves right before earnings. So understand that. But we do have this daily trend line right here to watch. We did break down. There's a sell signal. All right. We had negative divergence on the daily. And the last 2 days, we've been back testing. If I go to the hourly, you can see basically there's your sell signal and there's just the back test. So nothing's technically changed. We have a breakdown, a back test with negative divergence. It just gives me pause because it's right ahead of earnings. What I personally did is mitigated some of my risk by lightening up on my position. I can always jump back in after earnings, after we get the headline risk out of the way. I can always get back short. If I had to lean one way or the other, I would lean short, and I am short on this position. However, I did lighten up my position so that I'm not so heavily short right ahead of earnings. Just risk mitigation. That's critical in this business, is mitigate risk. We can always jump into trades. We can always get back into trades, but ahead of headline events, you're going to wake up to a big gap down, big gap up. It just doesn't make sense to be too heavy, so that's what I decided to do. Okay, and this looks interesting. CAT on the daily chart, you can see big negative divergence. And again, this kind of goes to that industrials. They look relatively soft, but on CAT, you can see negative divergence, clean daily uptrend line to watch. Sell signal came a couple days ago. The last 2 days, especially since the market's just been kind of relentlessly bullish, we've seen a back test. Technically, though, nothing's been changed. We still have that breakdown. They haven't been able to recover that trend line. So I suspect we're going to continue to sell down. Earnings coming up here in a little bit. Earnings is coming on, looks like this Tuesday the 31st. So have a little ways to go. But again, they could sell this down ahead of earnings and then maybe pop it. Or we don't know how earnings is going to play out. But as of right now, I still like it as a short, looking for more downside. And WMG, this was pointed out by a subscriber. But again, same setup, bullish. You have this trend line here, right there, but you've got negative divergence on the daily chart. And you have a gap down, sell signal, and then they just did a full back test, okay? So in my book, that's an objective short entry or add-on the last few days right there at trendline resistance with the negative divergence. After a sell signal, it's objective. So I think we're heading lower in this one. Earnings coming out here in a little while. We're coming into earnings season, so obviously, keep an eye on when the earnings comes out and where the stock's trading at. It always does. It's not going to hurt you to lighten up on a trade ahead of earnings and get back in if after earnings clears out. Okay, let's look at some longs on this one. I've got MDT. Looked kind of interesting to me. So on the daily chart, I've been talking about this one for a while, but it never really triggered a buy signal until I feel like either Friday or today you could have considered it a buy signal. Bullish falling wedge, okay? Bullish divergence on the daily chart and buy signal breakout right there. So in my mind, that looks good. Earnings coming out here in a few weeks, but we have that breakout. So I think this can continue to run. The measure target for this thing, if you measure the widest part of the wedge, kind of mark that out. It's basically, I think it's sending us up to about the 200-day moving average. And we've got decent resistance up in this zone right up in here. Anywhere from 87 up to about 89 looks like pretty decent resistance. So I think we're heading up there. We've got another, from where we're at now, it's another, about 6% or so to the lower target, and then maybe up to about 8%, 6 to 8% upside. Tesla, so on Tesla, you can see where they rallied it today. We're looking at a daily chart. And we have this downtrend line right here. Maybe we get a minor pullback off this level, but I'm not really looking to short this thing at right here. We're just a few days out from earnings. I think earnings comes on the 25th, and we're knocking on resistance. So if they pop this, especially after earnings, I could see it popping up to about 183.40, 183.50. Depends on how they get up there. If they rally it on earnings, you're probably going to overshoot it just a little bit, come back down. But I see decent resistance about that 183 area. As I roll out on the daily, you can see multiple reactions here. Looks like we got one kind of from overhead, a couple right in here. So that's the area of good resistance where I'd probably be looking to short Tesla. That from where we're at now is 25, 26% up. And that could come in just a single day on earnings. So it's too much risk for me to think we're going to just break out to the upside. Maybe there's a momentum trade there. Or I think in my mind, it's probably a little safer to short the thing if you rally up there. So I don't know. We'll see how we play this. They might catch a momentum trade on the move up to that level and then short it for the next leg lower. It's possible, but just want to point out what I'm saying. If I look at the hourly chart, bullish momentum. You can see here, we're making new highs in price and we're making new highs in momentum. So there's nothing telling me that, I want to short this stock, which tells me, if I had to lean one way, I'd say on earnings, we do get up, we are going to rally up there. But again, it's speculating, it's gambling because I don't see anything in the charts that tell me to get long, but I also don't see anything to get short. So I'd rather prefer to wait for something to show up, and then we can evaluate that. Okay, that's all I have, guys. So hopefully you guys are finding value. Trying to put you on winning trades. Can't always get them right, but we're going to continue to use the charts to find the winning trades. All we need to do is manage risk and get most of the trades right, and you should be able to make a profit. At the end of the day, risk mitigation is key. not getting crazy and going all in, and using the charts to be our guide. So that is what we're looking to do. If you guys are finding value in the content, drop me a thumbs up. Let me know, let me know how I'm doing. Leave a comment, and I will catch you on the next one.